Hello everybody, my name is Nicole and I'm a technical analyst and private investor. And today I thought I'd look at Chinese things. The reason being there have been a lot of shouty headlines in media and social media and all the rest of it. First of all about the strength of the yuan, and I'm not even going to talk about the virus or anything like that, I just can't be bothered. So to my first chart, which is the value of the yuan as expressed as yuan per US dollar. It's a weekly chart, and you can see that the final red candle has taken the yuan to its strongest, i.e. the fewest number of yuan you need, 6.3745 precisely, which is the strongest it's been in 3 years. So that's the screaming headline, right? Now, if you look at this chart, first of all, two things. It's been in a downtrend for a year now already. Yes, we were well above 7 and now we're sort of under 6.5. That's the reality of what's been going on. Everything about this Ichimoku chart says it's a trend, it's a trending market. And I think what we've seen this week is merely the continuation of a trend. But the previous low point, which was 6.42, in January this year, is a mere 0.7% from where we are today. In other words, it's taken us 5 months to gain just over 0.5%. I mean, these are not screaming moves. These are not moves to scream about. But what it does tell me is that this is a trend, and I expect it to continue. Moving on to my second chart, which is the value of the Shanghai Composite Index. Again, it's a weekly chart. And again, you can see that it's been in a sort of very gentle uptrend for over a year now. We retreated from February's high, had a bit of consolidation, very neat. I like neat charts. Whenever you hear me say the word neat, it means I like it, it's positive, it's not a mess. And what's happened this week is that we've traded out of that congestion zone. We've traded back up again. The trend line is intact. The moving averages are slightly messy at the moment, but on the whole, they've been very good to you so far this year. And what I'm going to say is that this is very much in line with what all the other Chinese indices are doing, right? They all confirm each other. This is one of the first and key tenets of Dow theory. So the other thing to note is that where we are today is roughly in the middle of the range between the 2008 high and the 2009 low. So unlike US indices and some European ones, we are not at all-time highs. So you're not paying over the odds here. And I think this trend is likely to continue higher. Now over to my third chart. And again, this goes perhaps slightly counterintuitive for many people. What it is, it's the yield on the benchmark 10-year Chinese government bond. And you can see for some time now we've stalled here at the 3.4% level. We've actually, looks as if we're about to complete a rounded top at that level. And look, we've got form here. We've peaked at 3.4 and 3.5 several times. That's yield, yes? So as yields go down, prices of the bond go up. Remember that. I think we're about to start moving lower again and go down to the 3% level at which there is support. Then we'll see how we'll go. But I've got a feeling that all this hype about inflation and higher yields is incorrect. See you next week and good luck. And for those of you who have a long weekend, enjoy your weekend.